screen. One would have to say the first 30 minutes, any kind of minor dip that you're getting, that's being lapped up. So let's see where we end up. But otherwise, a solid start to trade. Well, let's focus on our next management, Data Patterns. They posted a very good set of numbers in the second quarter. The company clocked in a sharp improvement in revenues, which spiked up. The order intake as well was up closer to 3.5 times at around 470 crores. To understand more about the past quarter, the way ahead, we're joined by Mr. Rangarajan, the CMD of the company. Hi, Mr. Rangarajan. Good morning. Thanks so much for joining in, and season's greetings to you as well as your family and your entire team at Data Patterns. Well,
thank you.
First up, I would like to ask you about your revenue targets. I'm going through your presentation, and you're still guiding for a top-line growth of around 25 to 35% odd, with margins of around 40%. My question to you is, your first half of the year has been phenomenal, right? I mean, you're up by close to 60%. Why wouldn't you want to revise that number? Or are you being a little bit cautious, or you want to keep the surprise for quarter three and go ahead and revise that number?
See, the idea is to, try to even out quarter on quarter. We're trying to do that. Essentially, our business is last quarter sale is very heavy. So we're trying to even out to go with market expectations. So we're trying doing that. We're doing that reasonably well now. But yes, coming back to the second point of 25 to 30%, it's likely that we can increase that. But we will do this one at a time. Let us do this market correction on quarter to quarter first, liquid growth the way we want. We've started somewhere. We are having an order book, which is about 830 odd crores.
Yes.
We expect additional about 300 crores order coming up in the next couple of quarters. So I think we are going there. So we will like to retain the maybe conservative growth plan, but let me deliver rather than talk much now.
Mr. Rangarajan, do you want to revise it at least to the upper end of the band instead of 25? Should we just not talk about 25 and talk about 35% itself? That's point number one. And also, how much will exports contribute? Because that's jumped up quite decently. And a couple of clarifications on exports. Is it better margin business?
No, export it will be a slightly lower margin than what we do in India.
Okay.
Because we do development, of course. There is some value add, but it is not an offset export. We actually do our own product which is exported, so there is a better margin in that some sense. It's not just manufacturing margin. But however, what we do here is a full system. There we do part of a system. So obviously the margins will be better when you do in India. And regarding export growth, I think we're doing about 10% export on our overall turnover on a yearly projection. So this may be higher in the first two quarters, but I think we'll retain about 10% on the year end export business. We are expecting some more export orders. We've quoted somewhere. We expect the contracts to come. Maybe we'll announce this in the next 1 or 2 months.
Okay, all right. And total order book of 1,000 crores with that 300 odd crores coming in the next couple of quarters. Good morning, Mr. Rangarajan. And on that guidance bit, so 35 to 40 is the new way to look at things for 23? Although officially you said you'll do it when the time comes.
Yeah, we'll retain what we are saying.
Okay.
And let us see how it goes, because see, there are pressures on component availability. We are actually stocking more now to reduce the pressure on unexpected component delays. So there are a few still problems in the market. We need to iron them out. We are buying more. Let us see how we are able to deliver.
In the last quarter, you'd said that between production and development, you're getting more work in a given quarter, even longer term. I mean, it's more beneficial because then you're involved in the entire chain from development to actual manufacturing. What is the split in your revenues in this quarter? How much came from development? How much from manufacturing?
I think this time development revenue more than manufacturing. We've got also order book is more development now than in production. We did about 34% in development and about 56% in production, and some 10% of service revenues also there.
Okay. By the way, just wanted to mention the market is now zooming away. So just take one look at what's happening on the screen. Wanted to get the Nifty up on board. 125 points higher for the Nifty. And many stocks are just charging ahead, specifically these platform companies. Very interesting. Yesterday, Nykaa had a big move on the upside. It's seeing some follow-on buying this morning, 3%. PB Fintech is up 3% and delivery is up over 9%. So there's huge moves seeing in many of these platform companies. Even names like Blue Star, Aster DM, City Union Bank are all looking pretty good. But sir, just want to come back, sorry, Mr. Rangarajan, want to come back to your business. You were telling us about the growth triggers. In the satellite business, you've shown your interest as well. Any orders that you have, any visibility here, and what could the growth be?
No, we don't have very large orders in satellite. This is going to be what we're working on is expected order book. The future, I think, looks bright because space has been opened up in India, and companies like us who do ground-up development of the entire satellite, I think the business will have to happen. We still not got traction there in terms of business. I expect it to happen in the coming years. But more importantly, our growth plans is going to be because, the DEF Expo we had recently, we found that the response from end users, the services, is exceedingly good. Much, much different than what it was earlier. With the government push on trying to make more in India and 50% to be done in India,
Okay.
I think the service sector, service officers, and all of them, the chiefs are looking at companies like ours
Okay.
who do fundamental development to address the gap, the growing gap on products and capital equipment which they need.
Okay.
So this is an excellent thing. I think medium to long term, it's going to be an enormous growth option
Right.
as long as it do more development in India.
Okay. All right, Mr. Rangarajan, very quickly, let's squeeze in a couple of questions. Then you've mentioned that your manufacturing capacity is going to be doubled from Q3 onwards. Put in a couple of numbers. What is it? What does the revenue potential go to?
See, we have put in infrastructure to cross 1,000 crores of revenue. It's possible.
Okay.
We are doubling or tripling some of the capacities, and it's almost another 3 months, the full system will be available to us. We've already started partially using the infrastructure.
Wow.
So I think we'll be able to address the growth plans as we have. And the more important thing is we have the infrastructure is creating is for end systems.
Okay.
We have a hangar where trucks can be brought inside, equipment
Yes.
can be assembled. From a box build to equipment build, the growth plan is going to be there. So we are actually ahead of time building infrastructure
Got it.
to look at future.
All right. So, Mr. Rangarajan, you'll have a capacity, a revenue potential of 1,000 crores is what you're saying, right? Potential, and then you can start ramping up. Got it. Very quickly, if you could tell us your cash conversion cycle, that still remains elevated, 367 days odd. Last year it was around 330 days. What is the steady state we should look at?
Now, we would look at coming it down, bringing it down to 270 to 300 days in the coming couple of years. But because of the availability of raw material, this sudden, we're not very sure when the component will come in. There is an accelerated procurement of components even for next year. We're buying components now and stocking it so that the delivery is not affected. We're still having quarter-to-quarter issues on delivery. What we should have delivered 2 quarters ahead, we still not delivered because of lack of available components. So the focus is trying to not really look at reducing inventory, but to build up inventory to deliver. Because we have an order book, an important thing is to deliver. That is why this bumpiness is coming up. It will get resolved in the coming years.
Okay. That 1,000 crores in potential revenues is a large number. It seems like a large number now because, I mean, we're talking about 1,000 crores in order book just a while back. And could you give us some indication, what is the timeline for something like this? How long could something like this take?
I can't give you a timeline, but what is important is that we have built up a large pipeline. Product development has happened. That is under either already accepted stage or already accepted or going through, trials. So if these gets converted, the size of pipeline we created is a few thousand crores. So that is the reason we need to create infrastructure. And also now that MOD business is directly open to us, we started bidding on MOD business directly, not necessarily only go through DRDO. So there is a mix of opportunities which is coming up. And we need to be prepared to address the opportunities. That is why infrastructure is being created.
Okay. All right. So we'll leave it at that. Thanks a lot for joining in and all the best for the year to come. That's the word coming in from Data Patterns. The market is doing fine. In fact, now the Bank Nifty is up 320 points, looking pretty good. Let's take a quick break on that note. On the other side, Mitesh Thakkar will tell us about some technical trades and we'll give you a list of buzzing stocks as well. So don't go anywhere.